Hey everybody, this is John. Welcome to the free video. And pretty fabulous day in the markets. It was a good day for just kind of scalping futures, holding on to our positions. Overall, Nasdaq futures here, nice little pop. That was just just kind of some of those trades we just kind of called out in the room. S&P futures, same thing, nice little pop, although they were a little dead in the water. Just a good day. When you get that power, you get that conviction, it's good. So that was just from day trading. And then we had Netflix is one we've held on to for a couple days. And Netflix was one that, as we approached this, the idea was, well, what happens if the markets here sell off? Because that's what everybody is thinking, that the markets are going to sell off, right? I mean, I think the markets are going to sell off, but I have not seen a sell signal, okay? Show me a sell signal. So we've just been holding on to Netflix here, okay? And there's a little bit more upside that I'm looking for on that one. And then also, they have earnings in a couple of weeks. And also Facebook. Facebook at this point is, $1.45 from all-time highs. And if we look at this, we've got a weekly squeeze. So, we got the power to potentially punch through there. And Facebook is another one here that has just been kind of, acting really good and just kind of sitting on that position. At this point, in a perfect world, I'd like to flip out the 110 calls and hold on to the out of the money calls and see if that thing kind of continues going higher. But the thing about it is that the key with this market is to not anticipate, just participate. Okay, don't anticipate, just participate. What do I mean by that? What I mean by that is that against all odds, I didn't think this market was going to go higher, but it just keeps going higher. But there's just been no sell signals. So you buy the pullbacks until it stops working, and once it stops working, you can start shorting the rallies. And I know that sounds simplistic, but there's plenty of room on these moves, and if we are going to roll over and die, there'll be plenty of room to the downside. But continually trying to fight it is just not the easiest way to make a living. Okay, so overall, most stocks today looking pretty good. Some of the kind of the old standbys, Priceline here, nice little pop. But more impressive has been Amazon, which you can see here is about ready to slam into that line. And then you've got, even things like Buffalo Wild Wings here is getting excited. But not every stock was having good times. Chipotle's here continues to struggle. I think there's going to be some trading opportunities there. But at the end of the day, the question is this rally for real? And when we get into the premium video, I'm going to talk about, what happened with bonds and yen and gold and what all that means for the markets. But for right now, remember, we've got end of month coming. We've got end of quarter coming, both on Thursday. So it makes sense that we could grind higher into there. All the fund managers can book their healthy returns, but then I would be very, very careful for a potential sell-off. All right? Hope that helps for that. All right, and keep in mind, for those of you who have ever wondered how to keep a position from blowing up in your face or how to enhance a losing position, Bruce is going to be conducting a class, simpleroptions.com/defense, and it's a 3-part course. The first part starts tonight on the 29th. If you missed it, it's okay. You can still sign up and get the recording, and remember that it is a 3-part class. The idea of the class, and again, this is the biggest question I get, and when people ask me, I always just refer them to Bruce, because he's the one who taught me how to salvage a trade that's already blown up in your face, how to identify if a trade is savable, okay, or is it just time to close it out, methods to retrain your brain with defense in mind, i.e. you start with defense in mind. It makes it a lot easier. But most importantly, this isn't about just defending some obscure kind of, broken wing butterfly 87 days out. We're talking short-term, long-term, long options, debit spreads, credit spreads, diagonals, butterflies, calendars, iron condors, okay? And of course the psychology behind it. 3-part course is only $497. And then if you don't want to do the full course, that's fine. If you're just more individualistic in terms of like, hey, I just do long options. Well, part 1 is just long options. You buy a call, you buy a put. Debit spreads and diagonals. Part 2, which is on April 5th, credit spreads, iron condors, iron flies, and then finally part 3, April 12th, butterflies, broken wing butterflies, short-term calendars, long-term calendars. Okay, so you can do each for $197 if there's just one that appeals to your style of trading more than the others, or you can combine them all, save $94. Okay, this is the kind of thing that just you got to think about. How much is it going to cost you not to have this information? This is essential for keeping a P&L curve that is level and helps you kind of dig your way out of holes, so to speak, because that does happen, and it's a good skill to have. All right, you guys have a good one, and we'll see you at the next update.